All right, what's up? Okay, so Sunday pre-market, obviously pre-week, not even pre-market, pre-week analysis, right? So obviously earnings seasons, what I'm saying, is kicking up. It's coming in hot. This week really doesn't have much. Like 10 a.m. on Wednesday. I mean, probably look out for that because that's orange. But we only have one red folder, which is right after, like 50 minutes after New York open on Friday. So yeah, not really much news, but earnings is up, so that'll definitely fill the spot of news. This week it has Monday, Tuesday is Netflix, okay, ASML, Tesla, Wednesday, okay, that's big. So really Tuesday and Wednesday is what I would be cautious of, because Netflix, tech, and then Tesla, big tech, and then ASML, chips and all that. So that's this week. But the month, obviously we got, like the big boys. Like after this week here, next week is Google, Microsoft, Facebook, Apple, and Amazon in the same week. So that's gonna be crazy. But until then, I mean, we just have to do what we have now. So I did start some high time frame analysis on some of these tickers. Just as like a way to continue training my eyes to read price, just because each ticker always has like a different layout of the same thing. So if you have like if you're looking for like breakers, right, because I know that's the thing that everybody is trying to see now. If you're looking for breakers, I would suggest picking one side. So you're either looking for a bullish breaker or you're looking for a bearish breaker. One of those examples, and then just look in as many tickers as you can to see if it's breakers, if it's all the same layout, because it might not be the same layout. And then you'll start to notice that since this algorithm that controls price controls almost everyone, not almost, I would say every ticker, I'm assuming, certain sectors would repeat within themselves, right? So if you look at a financial sector, like if you look at like Bank of America, that has a good example of a bullish breaker on like the 3-month chart. But then if you go through financials, you'll see that like almost all those charts have the same breaker pattern. So that's kind of how you build on that. But yeah, that's just kind of that. So going into trading view, right? Wait, I gotta put this off that, right? So monthly, obviously, we wicked into this previous year's open. Still haven't come down to where I think we're going to come down to, which is down by this monthly bullish order block, and probably stopping somewhere around this gap or just plunging into this gap, into this order block. Right, that's just what I'm thinking. Weekly, because I think I did this like 2 weeks ago or something, but we're still at this bearish weekly order block. The dealing range that we set, we're like, we can't get above the equilibrium of that, and then this equilibrium up here is like the equilibrium of this gap. So we're obviously not poking that much higher into those things, still struggling there. Except with this week that just happened, right? The previous weeks, the 2 previous weeks, right, they set equal lows, and that was like I think on the daily it's like 4 equal lows or something, like quadruple lows. It's crazy. But that's what we ran on OPEX, right? We had that market maker sell model. Basically from Monday is when we just started selling. Like there was really no like setup, because it was already in a sell model. So OPEX was just the sell half of a market maker sell model, right? So this week that just passed, we took the liquidity below these weekly lows, right? And weekly levels are strong levels. Like those are levels that there's a lot of liquidity in those areas, right? Because the higher time frame you go, the more liquidity it is, because that's where big money, like big banks, do all their dealing. Right, so let me just do that and then make this straight. I think I'm doing it right. Okay, cool. So we swept the liquidity under here. So actually that shouldn't even be this. It should be this. And this acronym is something called a turtle soup. It's another ICT phrase, but it's simply, in this case, this is a turtle soup long. That's what the parentheses are for. But basically, a turtle soup is a fake run below or above a high or a low. So a turtle soup long would be a fake run below an old low, a swing low, relative equal lows, yada yada. A turtle soup short would be a fake run above old highs, swing highs, relative equal highs, that stuff. And normally on a higher time frame, right, because it's all fractal, so it goes from higher to lower. Higher time frame would normally look like a retrace, right? But lower time frame would normally have some form of market maker model. So in this case, this turtle soup short had a pseudo buy model, right? Because I don't think the buy model that we had is finished. Actually, I don't want this there. Yeah, I don't think the buy model we have is finished, but I just wanted to show that we swept weekly lows. Like, we took those out, right? And we basically, how much percent was that? We took the low. Okay, 17-point sweep. That's definitely enough to collect stops on a weekly level. So now that we swept these lows and closed the way we did, I think now it's time for us to push a little deeper into this order block, because the quote-unquote rejection that we should have had from this weekly order block wasn't what I was anticipating. I was really looking for like these lows here, and then this touch of it, and then like 3 or 4 weeks of us pushing down and breaking this swing low. But we haven't taken this yet, so we're still dealing with this order block. So since we swept these weekly lows, now I'm looking for us to push basically into other weekly levels, right? Because since we swept these lows, we took the low of these areas, so now it's to look at the high of the previous weeks. So just to keep it simple, you would look at 39.22 and then 39.50, 75. Because this would be, I think this is an intermediate term high, because this was a swing high that we had on a weekly range that attempted to rebalance a gap, right? I think it's ICT mentorship like 12 or 11 when he went in on market structure and did like the long term, short term, intermediate. Simply an intermediate, the easiest way to look at it is the high, swing high or low, that attempted to rebalance some form of gap. And that's what this is. So if we break above this, then that's when I would see us just start pushing higher. But that's if we get here. So this is the real objective of the week, to get quote unquote short term bullish. Then above that, I would be looking at the equilibrium of the gap, which would be 39.76. And then honestly, if you're not okay with just the 50% of things, like the gaps of things, that's when you go to the OTE of the gap, right? Because if you can draw the 50% of the gap and it gets respected, then the OTE levels of the gap should be respected as well, right? So if 39.50 is what you're looking at, and then you also want 39.75, then you will start looking at the OTE ranges of this gap area. So that would be, what is that? 39.98, 4,015, 4,031, and then fill in the gap at 4,070. So those are the areas that I will be observing as the week goes on. So yeah, this turtle soup here, I think that's price getting ready to push somewhat higher, a little higher than it is now. Because if you look at it now in a fractal sense, that turtle soup was these same lows, right, into the same breaker that has been holding us up. And even though this was a running liquidity, once we take out whatever buy side objective we're looking at, I would look back at this area, not just because of how many lows it created, but how the lows were created. Because these aren't lows, these aren't candles that look like, what's a good example? These aren't candles that look like this candle here. Like, this candle doesn't have much wick, right? A lot of these candles have a lot of wicks, and wicks have very little volume compared to the bodies of the candle, right? So whatever buy side objective we run, I would then start looking here again, because this is a lot of wicks. Like, I don't like that many wicks holding quote unquote price up. And this breaker has been used a lot, so I don't think I don't know if there's like I haven't really observed or looked into like how many touches until something doesn't work, but until it doesn't work, then we know it doesn't work. So just assume that it'll work. But yeah, the same levels from the weekly up. I don't even have to transpose those, but you see it. And then go in on the 8-hour, you see that turtle soup, and then we had that Friday buy model basically. And now that we're heading up, we're going to be pushing into an 8-hour bearish OB, right? This one, which we hit last week, which really, that was the making of the sell model, right? We ran up, hit some form of high time frame liquidity, shifted structure, and then all the way down. So now that we took some from our sell side liquidity, now we're pushing up. So our obstacle in our way is this 8-hour bearish OB. I think it might offer some form of resistance, but I don't think it might be like they might just use this again instead of how it was used to break structure and send us lower. This order block may be used as like a way to retrace. Like, we create a gap or something, we hit this, we retrace into the gap, and then we push deeper and higher into that. So on the 8-hour, that's really what I'm looking at. And once we have examples of a sell model, right, flowing into what we could assume as a buy model, then this right side of this sell model is now the left side of a potential buy model. So with sell models, the models are formed left to right, right? Because that's how price prints. It prints from left to right. So all that is formed over here are targets when we shift structure and are on the right side. So with a buy model, everything on the left side, once we shift, is now targets. So obviously the closest are these highs, right, which we stop just right at, like just at those. So we have clean highs here. So basically the intraday targets you can look for, right, would be like these equal highs, which is right here. So that's not really a target, but then this high, and then this high, and then this high. So that's how you look at that. That's on the 8-hour. On the 4-hour, we have a breaker that can also be some form of resistance. That'll be before the OB, but that's a bearish breaker. So yeah, that's what that is. The previous weekly open, I'm waiting until 6 to move that, but that's also another level to look at. Any open, high, lower closes of high time frame candles are good liquidity objectives, like for price to run to or attempt to rebalance. Yeah, I think that's all I really have on the ES. I'm going to hour. I see. Yeah, now you can see the model a little better, but yeah, that's really all I have with the ES. Nothing much. What else can I look at? The dollar, right? Good old dollar. Okay, let's go on to 12-month. Make that brighter. 12-month, we are like really poking outside of a breaker, right? An old breaker back in, what was this? Back from 1998. So 1998 breaker has been holding us down, and now we've broken out of that. I don't know how much further we'll expand. I honestly can't say that, but these are like the highest we've had in like recent times, like from, what was that, from like 2015 to now. These are like new highs, and new highs normally mean some form of shorting opportunity. But I'll just have to watch as that unfolds, because as it goes higher, I'm just looking at, can they take out this, can they take this out, and it took that out recently. But next would be like this swing high here, and then entering in on this fair value gap right here, this 2-month fair value gap. 2 month, great. So stretch that out. Just want to see how it reacts to that area as it looks. As it pushes higher, it'll be hitting an order block, a bearish order block. So I don't know how that's going to play out, but I'll watch it as it hits these areas, because normally when price runs a lot of buy side liquidity and it hits high time frame liquidity like a gap or order block, or a gap and an order block, or a gap order block and a breaker, or whatever you're looking for, that normally sets up a sell model like what we did on the ES. So that's what I'm looking at with that. Let me go down to like the weekly then. Let me see. Yeah, so a lot of targets up here. We set up this gap down here that we didn't touch. Then we created this weekly gap too. Let me draw that. Okay, we have this weekly gap too. Daily. Oh, that's notes I had. I forgot to clear those. Wait. Okay. Yeah. Daily. Nothing else. Nothing. I mean, I would observe this area on the daily, because if we take that out, that can potentially be a break in market structure, potentially, because it hasn't happened yet. So you always want to wait for confirmation, right? So until that happens, then it's just hypothetical. But and it would count as a break in market structure or shift, however you look at it, because we had clean daily highs. Because remember, this is a daily chart, so we had clean daily highs, and then we had a purge or a raid or a sweep, whatever you want to use, on that buy side liquidity. And then if we break below this, right, if we run below this swing low and create displacement, then you have the 2022 mentorship model, you know, a run on one side of liquidity, then a break in structure, hopefully creates a gap, it retests the gap, and then it pushes lower into these levels and down into these gaps. If that happens, then this candle right here, if we break below this and we close below this candle's low, I will look at this candle as a breaker, right? Because we have a low, a high, or well, actually, excuse me. In this case, right, we don't have, let me see. Yeah, we don't really have a swing high, but on the daily when it's like this, I normally look at it as counting this candle's high. If it's higher than the candle next to it, right, which it is, I will count this as a swing high, and then a low, and then a higher high, and then a potential lower low, which is the price pattern for a bearish breaker. Why would I do that? Because on a daily you can't see a swing high, but if I go like on the 8 hour, wait, actually, dang, I ruined the chain of thought. Hold on, I gotta put that on 8 hour. Okay, let's try it again. On a daily, if you look at that and you come back here, this is that same daily low transposed on an 8 hour candle, and on an 8 hour candle, what do we have? A swing high, right? Lower high to the left, lower high to the right. So you have a high, a low, a higher high, and then a potential lower low. And if that happens, then I'll be looking for price to run this consolidation area and then down into this gap. Maybe down into this gap at the most, but at least this consolidation area would be what I was looking for if that happens on the 8 hour. And if that happens, if I see a daily or a high time frame sell model on $1, then I would be looking at the ES to continue pushing higher, because that's the divergence I've been seeing between those. So that's really what I'm looking for so far. And then this 8 hour gap, we came down into it, but we did not technically fill it. We came really close, but for whatever reason, price was like, nah, I'm good, and then it just reversed. So until that happens, matter of fact, if I go lower, yeah, see, so like on the daily or the 8 hour, right, we'll be waiting for this low to be taken for a shift in market structure. But if you go lower, like on the 8 hour, you could deem that as this being, you know, a shift in market structure, because at that point we already ran above these highs, and then we set this low, and then we consolidated for a little bit, and then we broke this low, right? We broke that swing low. So now you have a 4 hour order block a bearish order block, or ICT bearish order block. I gotta, because that's his stuff. 4 hour. So something there. There's a fair value gap here. There's a tiny one here, and then there's another one here. So you can observe those, see what happens. With that, actually, is that right? Okay, yeah, I have a feeling. Okay, yeah, so looking at that, and then let's go into hour and see what we got. Okay, so with that, oh yeah, that's a 2 hour. With that 4 hour order block, you see on a 1 hour, you could, like, you see how it just keeps becoming more and more fractal. Like we're seeing more candles, but we're still seeing the same structure. Like if you're trading on a 1 hour, this pattern here would be the sell model that you're looking for to run these lows under here, right? But these lows, if you remember the question mark, are the same daily lows. So what I'm basically saying is price running from here up and then down here on an hour could be an hourly market maker sell model. But on a daily, that would be the actual daily break. Like the sell model run would be the run below this low. That's what I interpret the fractal nature of price as. So yeah, that's that. What else? Oh yeah, I have this labeled higher high. Because when I'm looking for breakers, when the swing highs are too close for me to tell, I just draw a line so that I don't make the mistake. But in this case, we had a high, a low, and a higher high. It's not much higher, but it is higher. And then we had our lower low. So then this last down close candle would be a bearish breaker. Did we retest it? I don't know. I haven't checked. That looks close, but I don't think it touched it. Right? When I mean it, I don't think it touched it. I mean, I don't think it touched it with this. But technically, the retest was this. Right? This kind of right here. Why is that? So we obviously see the high, the low, the higher high, and the lower low, right? All that fighting game input stuff. Now, normally with breakers, right, you would look for a candle close below the low of this candle. Right? The second this candle closes below this low, then you'd be looking for a retest. Now, I personally suck with that type of retest, right? Because I would see the close, and then see this gap, and I would be like, I'm gonna wait for it to get to the gap, right? But the candle closed below the low, so now it's a breaker. Then it come up and retests the low of the candle, right? And then it sells down, right? Even though it does come back up, it doesn't come back up to the low of the breaker. Right? It comes close, but it doesn't come to it. So this is the retest. And I got to get better with taking these because a lot of my trades, especially with scalping, a lot of scalping entries have this type of entry. And I suck at it and I hate it because I would have this gap and then it doesn't do that. And I'm like, okay, let me chase a little lower. And then it retraces higher, stops me out, and then goes where I want it to go. So I need to get better at seeing those type of entries. But that is an entry off of a breaker. Like that's one of the entries you could do. You either look at with a breaker, right? You want to look at if it's bearish or bearish breaker, you want to look at the low, the low, the close, and then like the middle of it. You don't really want price to retest the open and a high, even though it can, but most of the time you don't want price to come above the 50% of these areas. So yeah, that's that. I think that's it with dollar. So that's what I'm looking at it. I don't want it to go higher if I want the buy model on ES that I'm seeing to play out. So hopefully seeing this will give me some conviction to swing. I don't know, some just low risk positions, not anything crazy, but who knows? We'll see. So after that, because this is going off our list, it's 20-something minutes now. Which one could I look at? So I have I've done analysis basically on the top 10 of SPY's holdings, and then this is just a list of things that I look for every day. And then this is the earnings things that I looked at. I'm not finished, but most of these are happening this week. Like Bank of America is happening Monday before open. IBM is happening after close. So all those things are what I'm looking at, right? But I would recommend doing these studies if you're trying to see different examples or build a reference of how these things look, like how a breaker looks, different examples of a break and market structure, different examples of order blocks, and just things that you might see, examples of things that you can't see on what you normally trade. So that's really why I do the high time frame analysis. If you're someone that when you do analysis on something, you're like, I might as well trade it, then I mean, you can do this, but I mean, again, that's at your own risk. But one of them that I looked at, I'll just go over that. Just one of these. So Bank of America, right? So I normally start, or I recently started doing like really high time frame, like from the 12-month all the way down to the daily. Because I saw in the 12-month, a lot of these tickers and things that we're looking at are retracing into 12-month fair value gaps. Like a lot of them. So what was it? Bank of America, right? So we had whatever happened, but we hit a 12-month bearish order block, right? This candle is from 2006. So we hit a 12-month bearish order block and we filled this gap, right? We did that last year, we hit it. And then this year again, we hit again. And we took out last year's high, right? So I look at that and then I see this as a bullish OB because again, this is a 12 month. So this is a year of price action. So we had a down close candle, right, which was the COVID drop thing. And then this expansion. So I'm looking at this as a 12-month bullish OB, right? Then I go to the 3-month. Then on the 3-month, here's an example of a bullish breaker. All right, so we hit a 12-month order block, and then we took this swing low out, right? And we haven't completed the fair value gap yet. I mean, well, yeah, basically we haven't completed the fair value gap because we have the A, we have the B, which is the actual gap candle, but the C, 3-month candle, isn't finished yet. We still have 2 more months until this finishes to see the range of what this fair value gap is. So these are really high time frame charts, so they'll take a long time. But this example of this breaker, this lower low that's labeled, it's labeled that for a reason, right? Because with breakers, you normally look at, if you're a high time frame, you can look at simple things like this low, this high, a lower low, and then a higher high, right? That's what you look for. But you want to look for like the recent, the recent time frame of that window, like that low high, lower low, higher high. You don't want to look at like the you don't want to look like from this low to this high and then this higher low, and then no, just look at the recent price swing, right? So we had a lower low, low, high, a lower low. So we ran liquidity both sides, right? We ran out a high and we ran out a low. And the high I'm looking at is this high, right? Because high time frame, this is an all-encompassing model. We had this swing high form, then we had this swing low form, and this swing high took out this high, and then boom, took out that low, and now we have a higher high. So really you could draw this as a lower low and this is a higher high. I don't have to do that, but you can if you need to. And you see that we have come back down into that range and have some support there. Again, this is 3 months, so we have to wait to see how it actually holds up. But then you go on the 2-month, and that fractal is still there, isn't it? This high, this low, this high, this lower low, and then a higher high. Retest that range, right? And then you go on a monthly, and then it's a little hard to see, but it's still this high, low, higher, high, low. So that's fractal initial price. But we also have a bearish breaker, right? We have this high, this low, higher high, and then a lower low. So, and it did the same retest as that dollar chart, right? Where you have, I normally look at the bodies of it, but you have the wick low of this candle that we're thinking is going to be a breaker solely because we had a high a swing low, and then we took out this high. So you most likely expect a lower low. You wouldn't jump the gun, but that's what you'd anticipate. So once this candle right here, closed below this low, which it did, then this candle came right up into the range of it, or the bodies of it. That's another thing P-Dub has taught us is you want to look for the price pattern, the high, low, higher, high, and lower low. But if you see equal body lows, or these aren't exactly equal, but they're off by like 4 cents. But there's times where it'll be very like clean equal body lows. You could set your entry at those areas, and then most of the time you're picked up with like little heat. Like price would do this thing where it closes below, so now it's a breaker, and then it wakes up, barely pushes any, like that's no heat, like that's nothing. And then the very next month, right, because this is a monthly candle, so the very next month was a sell, right? And I guess I don't know what your targets would have been in this scenario, but maybe it was this monthly high or something, I don't know, but or into this OB or whatever it was. But that's another entry thing you can do with breakers. But you see, it had the same type of retest that the dollar did, so that's something to look for. But yeah, that's just kind of how I'm looking at it. This OTE range it's kind of hard for me to tell on my phone, but it's basically this entire range, like from down here, the lowest body candle, to the highest body candle, and then these are the quote-unquote discount ranges if you're trying to go long. But I have this labeled as OGC, which is original consolidation, for what I'm thinking is a sell model that'll push down below these areas, like at least below like 20 something. But again, that's just high time frame analysis, so I have to wait for this to play out. I don't think I went to, okay, I did, but this is more extra stuff. But this is just like a weekly accumulation in an order block that has another example of a turtle soup on the weekly chart, right? We have lows, and you have a fake run below. It's like, okay, we're going lower, and it's like, no, it's not, and it closes higher. So now I'm looking to see if it'll push into these regions, and then that'll obviously be based off of earnings, right? What earnings give us, because earnings, normally what would take a couple days for it to move up, earnings could do that in one candle. So I just want to observe how it reacts to those areas. But yeah, that's an example of it. I've been talking for 30 something minutes. I think I don't have anything else to say. That's everything. Have a blessed weekend and a blessed week, upcoming week. Hopefully no one gets killed during earnings. Talking to myself and you guys. But that's all I got. Good luck and good trading, right? That's what ICT says, right? Is that what he says? Yeah, good luck and good trading. Yeah, that's